Video is going to be covering the purchase and sale of a flip. Let's take a look. So first thing we're going to look at is the settlement statement for the purchase. And I've already entered the journal entry, but we'll walk through it. So everything makes sense. So this is a flip. In other words, it's going to be bought and sold within a year, within 12 months. And we're going to use the P&L accounts for most of it. So the purchase price is going to be going to cost of goods sold. So that's our debit here, our purchase. And we're going to use the class by property address. And then when we get to points for the loan, we're going to, again, cost of goods sold, debt service. And I think, yeah, that would be down here, right? Okay, the points, yeah, the points. So that'd be the second part of the settlement. Okay, and then the daily interest here, we'll put that to debt service as well. The remaining closing costs, which should be, let's go back up here. Yep, but the closing costs besides these debt items. And then we have, so that's going to be our buying costs. And these are all COGS accounts, cost of goods sold. And then our holding accounts, while we have the flip, we have our city tax here and our county tax. And then we have taxes and insurance here. That's going to escrow. And put in a construction escrow on this one as a variable. Here we go. Then we have our earnest money deposit. Is that reflected on here? There we go. Yep, that's our 4,500 there. So that's another current assets, and now we're crediting it to clear it out. Here's our loan we're establishing. That's the 360. Have some more holding costs, city taxes here. And then this is our due at closing. So that should equal there. Cash due at closing. Let's see if, oh yeah, here's our other escrow for taxes, that 500. I know it's a little small, I have to zoom in and out. Okay, so that's our purchase journal entry. And I put that at 12/31/23. So if we look at our balance sheet as of that date, let's take a look. Okay. So we have our construction escrow, our purchase deposits. Now this would be 0 because I just didn't book the prior when we made the earnest money deposit of 4,500. That would debit the asset. So then when we close, that would clear it. We have our taxes and insurance escrow. We have our loan payable. That all looks correct. Let's look at our P&L as of that date. So you see our purchase price here, buying costs, holding costs, our debt service. Of course, we have a negative gross profit at this point. Makes sense. Now let's move to our sale. So here's our settlement summary for our sale. If I can zoom in a little bit there. Yeah, a little bit. Okay. See if I can go in a little bit more. There we go. Okay, so this is our income account flips selling price, because remember, we're booking to the P&L. So that's, of course, a credit. And again, we're always putting the class in. We'll look at the financials by class when we're done here, provided I remember. Taxes. City taxes, there's 800. The county taxes, the 4,000. Commission, it's a pretty big chunk, so good to separate that out. That would be on the second page there. And then transfer and other closing costs. And then we have our loan payoff right here. So we're debiting that to clear it. And then we have city county taxes right here. We're debiting our cost of goods sold account. And then the proceeds would be the cash due right here to the seller, which should match, and it does. Okay, so let's take a look now at the balance sheet and see what it looks like. Okay, we didn't do anything with construction escrow. That would be cleared out. We talked about purchase deposits. Tax insurance escrow would be cleared out as well. We just didn't book all those transactions. Now the loan payable is cleared. That's correct. That's what we'd expect. And let's look at the P&L. Oh, let's look at this by class first while we're thinking of it. So let's go here by class and we'll run it. There we go. So now we see transactions that are supposed to be associated with a class they do have a class, 123 Main Street. Checking account, of course, wouldn't make sense to be associated with a class. And we could also just show one class we want. So we could do that for any given property. P&L. Good. So we have our selling price up here. And this is, let's see, what did we have for our selling price? What hit our selling price? Yeah. Did I want that? Let me see. I think I wanted that. Yeah, I wanted that to be selling costs. It's a little bit off. Okay, let's do that. I'm gonna refresh this. Because really we want our selling costs to be exactly what was on the settlement. In other words, it's a gross amount. Okay, so there we go. Our selling price is 900,000. And the nice thing about booking everything to the P&L like this is we can arrive at our gross profit for this project. So we have our purchase, buying costs, holding costs, debt service, selling costs for this property. And of course, we don't know that until we run this by class. There we go. So now we know this is for Main Street, and you can do this for any number of properties, well, up to 40 classes. So here we have Main Street, and we can see the profitability of that property, that project. So that's how to book the purchase and sale of a flip using the profit and loss method.